Hello, welcome to Crack Academy. I am Aman Soni and today I'll be discussing a very important concept with you, which is Finance Commission. So, topic name is Finance Commission. Now see this, if I talk about centers tax collection, then center gets maximum funds from CGST, highest is CGST, then we have corporate tax, then we have income tax, then we have excise duty, and last is customs duty. That is, if we arrange the taxes in decreasing order of their collection, then the taxes are like this: CGST, corporate tax, income tax, excise duty and customs duty. Now you see this, if I talk about taxes, we have three terms. If we talk about taxes, we have three terms, which are tax imposed by, other is tax collected by, and third is tax appropriated by. All right, appropriated. Now let me explain. Suppose we have an offline class going on and few students, they have a habit of coming late in the class. So what does the institution decides? The institution decides that all those students who will be coming late, they have to pay a fine of 10 rupees. So now I will be teaching in the class, right? The institution management won't be teaching in the class. So now what happens is, the institution is imposing the tax. So now point comes out, who is going to collect that tax? So the institution tells that, sir, you will be taking class, students will be coming late in your class, do one thing, you collect the tax. So in this case, you collect the fine. So here in this case, fine is imposed by the management. But who is collecting the fine? The fine is collected by me, the teacher. But then comes the thing, every day suppose I am collecting 50 rupees, the point comes, who is going to spend that money? Who has the authority to spend that money? So then the management says that, look, the institution is mine, I'll take the money, I'll spend the money. That's one option. Second option, the institution says, sir, you are collecting the money, you have full authority to spend the money. So in that case, the teacher can spend the money. Third option is, sir, you take half, we take half, we are going to spend the money the way we desire, 50-50 each. So in this case, the fine, or the tax, as I was saying, the fine is appropriated by the institution as well as the teacher. So we have three terms, right? Fine imposed by, who is imposing it, fine collected by, which authority is collecting the fine, and fine appropriated by means which authority has the right to spend that money. So in terms of taxes also, we have three terms: taxes imposed by, taxes collected by, and taxes appropriated by. Now all these taxes, CGST, corporate tax, income tax, excise duty, customs duty, rather even if we arrange the largest taxes in the India, these are the largest taxes in terms of their revenue collected. All these taxes are imposed by the central government. All these taxes are collected by central government. All right. Now let me give you one more example. Suppose it is my birthday today. If it is my birthday today, what would the students do? The students, they are going to bring me a cake. But would each one of you would be bringing one cake each for me? No. What you would be doing is, you will be pooling in money, putting the money somewhere over here, and from that pooled in money, you are going to bring a cake for me. Don't you think the money which you have pooled would be called a pool of money for Aman sir's birthday? Similarly, all these taxes which are collected by center, together they are called pool of taxes. All right. So now you see this, the taxes are imposed by center, collected by center. Now you see around yourself. Who is spending money on education? The state government. Spending money on health? State government. Rural roads? State government. Go down, the state government. Electricity? State government. How is it possible that the money is collected by someone else but is being spent by someone else? How is it possible? It's possible because whatever money the center is collecting, a part of that money would flow from center to the states. But if we leave it to the discretion of center on how much money would be transferred to the state, center would say, I won't even transfer 1 rupee. I'll keep the whole rupee with my whole amount with myself. Hence, what the constitution has done is, constitution has set up a finance commission under article 280. Constitution has given a provision that a finance commission should be set up under article 280. So it's the finance commission which decides how much taxes, this is called taxes, right? How much taxes will be devolved from center to the states. All right. So therefore, all these taxes are appropriated by center and state both. And as these taxes will be divided between center and the states, therefore it is called divisible pool of taxes. So all these taxes together are called divisible pool of taxes. And when the funds flow from center to the states, it is called tax devolution. It's called tax devolution. So it is called tax devolution. Along with that, there are two other ways through which funds flow from center to the states. Those two other routes are grants, which center gives to the states, and other route is central sponsored schemes through which funds flow from center to the states. But let's confine ourselves to the discussion of finance commission. So what I said was that from center, the funds they are devolved to the states. So these are various states: S1, S2, S3, S4. So when the funds they flow vertically downwards from center to the states, it is called vertical devolution of funds. As per 15th Finance Commission, whose recommendation we are following now, 15th Finance Commission tenure from 20 to 21 and from 21 to 26. Say 21, 22 to 25, 26. This is the tenure of 15th Finance Commission. As per 15th Finance Commission, there should be 41% vertical devolution of funds. What does it mean? It means that if center has got with itself 100 rupees, 41 would be flowing down. 41 rupees would be flowing down to various states. So in this case, if center has with itself total 100 rupees, out of this 100, 41 would go through tax devolution. Center would be left with 59. From this 59, grants would also be given, central sponsored schemes fund will also be given, and remaining would be left with the center. All right. So now what happens? I told you, 15th Finance Commission said there would be 41% vertical devolution of funds. So now from center, 41 rupees, 41% of funds flows to all the states. But don't you think now the states would be fighting with each other how much funds they want? Rajasthan would say it has maximum area, it should get more funds. Punjab would say it is feeding the whole country, it should get more funds. UP would say it has largest population, it should get more funds. So there should be a division of funds between the states also as per certain parameters. The Finance Commission, it also decides the parameters based on which the funds will be divided among all the states, and when the fund is divided among all the states, it is called horizontal devolution of funds. All right. So I hope you have understood what's the requirement of Finance Commission, so that the taxes, the pool of taxes is divided between center and the states. At the same time, the Finance Commission should be able to give a criteria based on which the funds will be divided among the states. Which are the parameters for 15th Finance Commission or for 14th Finance Commission? We'll discuss that in some other lecture or some other class. All right. Till then, bye bye. Good day. Take care.